ready for a new and exciting topic? The Real Estate and Mortgage Show is back with your host, Walter Montero. He's a real estate and mortgage agent in Ontario, implements internet marketing strategies, and offers an online course to invest in private mortgages. Let's listen to this fascinating episode. You will surely learn much from this talk.
Hey guys, how you doing? Walter Montero here with the Real Estate and Mortgage Show. Welcome to the show. This week's show, I wanted to talk a little bit about mortgage penalties because I know it comes up quite a bit. And really, one of the things that I always find very interesting is how everybody is so quick to jump on the 5-year rate. And at any rate, just wanted to talk to you a little bit about that because it's an interesting sort of phenomenon that Canadians like to do because we're not big risk takers. So we like to lock in our mortgages as long as possible. And that's typically the 5-year rate, which most people do. But what's very interesting about that particular phenomenon, the reason I find it interesting, is because according to CMHC, 72% of mortgages are paid out in less than the 5 years of the term of the mortgage. In fact, my understanding is the average mortgage has a lifespan of about 38 months before something is done with it. So really what's interesting about that is obviously people take a 5-year rate. Most people think, yeah, I'm just going to be locked in for 5 years. But if I told you, walking out of your lawyer's office after you sign that mortgage, that there's a 7 in 10 chance that you will break that mortgage, you probably wouldn't believe me. But it is very true. It's those are the numbers provided by CMHC and by the Mortgage Professionals Canada. So very interesting stuff. And these are the reason I'm talking about this is because of mortgage penalties, because some of these mortgage penalties that I've been seeing are just unbelievable. The amounts that people pay in mortgage penalties is unbelievable. Really, that's because of the way mortgage penalties are calculated. So mortgage penalties are calculated on two different sort of disciplines. The way that big banks and many of the credit unions calculate them, and then the way that a lot of the monolines calculate them. And remember, the monoline lenders are typically the lenders that deal with the consumer through the mortgage brokerage channel. So, it's one thing to keep in mind that when you're looking at a couple of different mortgage options, and one is a bank and the other one's through a monoline lender, this is why mortgage brokers are always very quick to say it's not always about the rate. And this is why, okay? Because the chances of you breaking that 5-year mortgage is 72%. So there's a 72% chance you're going to break that mortgage. And if you break it, depending on who's holding your mortgage, the cost can be very significant, okay? So just to preface this conversation here before we go any further, if you are in a variable rate mortgage, this really doesn't apply because regardless of who holds your variable rate mortgage, whether it's a monoline or a bank, then you're typically looking at a 3-month interest penalty. That is the norm for a variable rate mortgage, and that's what you're going to pay. Okay, so the interest rate differential, or what they call the IRD, doesn't apply. But if you are in a fixed term mortgage and a 5-year mortgage primarily, then you are going to be looking at either a 3-month interest penalty or a interest rate differential, the greater of the two. All right. So it's something to keep in mind here when you're doing your math in terms of which mortgage you should go with, because a lot of times I see these monolines only come in maybe, a point, a hundredth or maybe 200th of a percentage point, and people will go with the lower rate from the bank. And it's crazy because you're taking a big chance of paying a massive penalty. All right. So let me just give you an example. Let's say you have a $300,000 mortgage and you got 2 years left on it. And the rate that you got it from the bank was 2.99%. And the original posted rate from that lender, so their 5-year posted rate, was 4.74%. So therefore, your discount was 1.75% when you borrowed the money, okay? So if you go to pay out that mortgage, and let's say you do it, 3 years in, you got 2 years left, and they tell you that the current 2-year rate that you can get from them is 3.69%, what they will do is they will take that 3.69% and they will subtract the discount that you got, which was 1.75%, which leaves you with 1.94%. So what they do is they take that $300,000 and they multiply it by 1.94%, and then they multiply it by 2 years. That gives you a penalty of $11,640. A significant amount of money. That's a lot of money. And folks, remember, this is after-tax money. So this is a significant penalty. If you look at a monoline lender, which are typically the lenders that deal with the mortgage brokerage community, and you have the same 2.99% mortgage, and you're 3 years in, you got 2 years left. Monoline lenders don't deal with posted rates. They just deal with discounted rates. So they would take your 2.99%, and then they would subtract the current 2-year mortgage, which is 2.29%, which would leave them with 0.7%. Okay? So therefore, if you take that $300,000, you multiply it by 0.7 times 2, that's a $4,200 penalty. So now the difference, of course, is significant. There's no question. The difference between $11,640 as opposed to $4,200. So, and again, the chances of you breaking that mortgage, remember, is 72%. All right. So very important numbers to keep in mind when you're doing your due diligence in terms of researching what mortgage you should go with. The ideal thing to do would be to sit down with a mortgage professional, a mortgage broker, and go through this exercise to make sure that you are making the right decision, that somewhere down the road, because you wanted to save, a goofy little amount of money on a monthly basis, that this thing doesn't end up costing you a fortune when you want to get out of it. And CMHC, by the way, says that what gets people to break these mortgages are typically new jobs, marriage separations, new babies that come into play, obits or deaths in the family. So there are a lot of things. There's a lot of life that can happen during a 5-year mortgage. So keep that in mind, that you've got a 72% chance of breaking that mortgage. So if the chances are that high, you may want to take the route of dealing with a monoline as dealing with a bank. Now, I don't want to be bank slamming here by any means, but I just want you to make sure that you understand what you're getting into. All right. This week's show is a little bit shorter. It's a little bit controversial, of course, but this is information that I think you really need to know. And feel free to share this show with anybody. We would certainly appreciate it. I think this is vital information that needs to get into as many hands as possible. And don't forget, if you need any real estate or mortgage help, by all means, give us a call at 519-624-9222. Or you can email Karen at MaximumResults.ca for mortgages, or Walter at MaximumResults.ca for real estate. Thank you very much, and I hope you're having a great day.
You've reached the end of another episode of the Real Estate and Mortgage Show. Connect with us at therealestateandmortgageshow.com. Don't forget to sign up for our newsletter to get instant access to our new updates. See you at the next episode.